scanning of painter tokens in paint cans. Favorable factors such as a good monsoon leading to bumper harvest, RBI's repeated rate cuts, government income tax reductions, and lower GST rates have contributed to this optimism, supporting the view that pent-up demand is beginning to materialize. We are optimistic that post-Diwali sales, as the wedding season kicks in and favorable market conditions come forth, these will all act as strong tailwinds to revive demand in the market. That is all that I have by way of a presentation. I look forward to answering your questions. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Prakash Kapadia from Kapadia Financial Services. Please go ahead.
Yeah, thanks for the opportunity. Evanji, a couple of questions from my end. We were expecting double-digit volume growth to come back, but that has, not been up to expectations. So, the primary thesis was demand will come back on a low base. This is, been for some time. Obviously, we've been doing, things like dealer expansion, focusing on value-added products, increasing tinting machines. So, how, do we build the case of the next few quarters? Is double-digit growth now certain? Because some of the, commentary you made in the opening remarks where, these are tailwinds. So are we confident of, huge outperformance to industry? And, primarily the industry growth has to come back, then, our, outperformance to that industry growth becomes more relevant, right? And secondly, if you could also give us some sense, we've added gross block, we've had a CWIP which will get commenced. So from the 1,300 odd crores kind of, sales, what is the optimum sales possible in the next few years based on this capacity expansion?
Thanks, Prakashji. Two questions that you have asked. First on growth. Well, first of all, our growth is not on a very weak base. In Q2 of last year, we had considerably outperformed the industry. I don't remember the exact number, but it was somewhere between 6 to 7% last year when industry leaders had declared a substantial negative top line in Q2 of last year. So our base is not that weak compared to others. Now, normally monsoon is built into the base. Every year we have rains in Q2 and Q2 is always the weakest quarter. However, you will notice that sequentially, contrary to all other people who have declared results, our Q2 top line numbers are slightly higher than Q1 numbers. Now, normally what happens in monsoons is that although monsoon extends from June till end of September and easily sometimes also spills into the first half of October, you usually have monsoons with a break in between of about a month or 20 days or 25 days. Now, that did not happen this year. The country has received much more than normal rainfall and there has virtually been no break in the monsoon. It's also the longest monsoon period that I remember in history, where monsoon arrived about 10 to 15 days earlier. Normally, the onset of monsoon is 1st June in Kerala and hits the rest of the country after 15th, 20th June. This time, monsoons arrived by 20th May, and the whole country was drenched in rain from end of May onwards, and that continued till the first week of October. So, the reason for my optimism for growth, of course, weather patterns are something that we cannot control. But you look at other indicators on the ground. Now, the market leader, we still have to wait for their results to come out. Now, they have reported top line negative for 6 quarters in a row. I don't have access to their numbers, but our market intelligence says that they have probably done significantly better in Q2 and may report positive for the first time in 7 quarters. Now, that's a good sign as far as the industry, and that's, the bellwether for industry growth. And you rightly said, if the industry growth has to come back on track. And once the industry growth come back on track and the industry starts growing at 6-7%, we can hope to jump back to our earlier outperformance and perform at 20%. But when the industry is in negative territory, it becomes very difficult for us to register 15-20% growth. No initiatives work when the mood on the ground is somber and downbeat. Now, 3-4 things have contributed in the last quarter, signals that we got. We started the quarter with a very good July. And unfortunately, that was followed by a terrible August. But September was again very good. So 2 out of 3 months in the quarter registering good growth was one good signal. The fund inflow from the dealers was at an unprecedented high during the last 2 months. Now, that is a very clear signal that their stocks have been liquidated, because as long as a dealer is sitting on excess inventory, the payments are a little sluggish as always. And as the stocks get liquidated, the money flow improves very significantly. The third signal that you get is that, as you are aware, all paint companies put various tokens in paint cans for painters and contractors to scan. The scanning that we have seen in the last 2 months have also been at an unprecedented level. Now, scanning will occur only when secondary sales happen. And when secondary sales happen in a big way, the paints get used, the tokens are discovered by the influencers, and they scan those. So all of these have pointed in a very, very positive direction. And normally the 1 month before Diwali is not a time when dealers will typically stock up any more inventory. They are usually in an inventory liquidation mode. If the inventory gets liquidated well during the month of, the 3 weeks preceding Diwali, then post-Diwali the sales is excellent. That is what has happened, and I expect to see, because last year Diwali was 31st October. So for 7-8 days after Diwali, large parts of the country are closed down. Bihar, Jharkhand, Eastern UP are closed down because of Chhath. Gujarat is shut down because of Labh Pancham, which comes 5-6 days after Diwali, and so on and so forth. In many other parts of country, you have Bhai Dooj and various other festivals. And really the buying resumes 8-10 days after Diwali. So we expect now, and we can see that already because all those festivities are behind us, we can see the uptick in primary offtake happening now. And there is a bumper wedding season ahead, unprecedented number of weddings, which are perhaps a bigger precursor to painting than Diwali actually. And therefore, it gives me confidence with the signals that we have received that these are not just green shoots, but clear indication that demand is coming back. Now, whether it will come back to its original level where the industry grew at 8-9%, whether it will come back within 1 month or it will take 3 or 4 months for that to happen is something that I cannot predict. But I'm very optimistic that very soon you will start seeing double-digit growth from us and high double-digit growth, hopefully by Q4 at least, if not earlier. As far as the second question that you asked on CapEx, well, CapEx that is done for capacity expansion is really done with a very long-term view in mind. So a plant coming on stream does not necessarily add either to the top line or the bottom line. So those are long-term initiatives taken more with a strategic long-term view as to what the demand will be in the next 4 or 5 years. And those plants will come on stream, some of them in this quarter, in this month or next month, and some in the next quarter. But I would not link that to our growth prospects going forward.
What I was trying to understand is we can double our turnover from this capex, or would more capex be required directionally?
No. I mean, technically, yeah, can we double? We can do much more than that. I mean, the capacity that is being created is to more than double the turnover. But it's not that when a plant comes into existence and immediately your sales get doubled.
Over a period of time, I understand, I get that.
In fact, I mean, to be more specific, after this capex, we do not expect any significant capex for the next 3 to 4 years. I think this capex will ride us till FY29 very comfortably.
Yeah, that is what I was getting. And lastly, Amanji, in terms of the demand coming back, so that feel-good factor or that sentimental change in terms of that repainting happening or that repainting, driving demand for us and all the other players, is that sense coming from on the ground? Because, that remains the crucial pie in volume growth coming back for all the players.
Yeah, it does. And I gave you all the indicators that cause us to feel that. The liquidation of stocks at the dealer end, the increased scanning by the painters and contractors, all that means, and these are at fairly unprecedented levels, at levels that we have never seen in the past. And therefore, it gives us confidence that the demand is happening at the ground. It has not reflected as much as we would have liked to in primary sales, but as long as secondary sales has been very good in the recent last 1.5 months, the primary demand is not very far behind. And I think you will see the results from that across the entire industry, I would expect on Q3.
Understood. That's very clear and very helpful. Wishing you all the best, and hopefully we'll see the mojo coming back for us and the industry very soon.
Very good. Thank you very much, Prakash.
Thank you. The next question is from the line of Janam Gosar from Nuvama Wealth Management. Please go ahead.
Yeah, thanks. 3 questions. My first question is on the gross margin. So we are seeing 100 basis gross margin improvement for you. So I wanted to understand from a competition perspective, dealer incentive perspective, and overall discounting, how are things versus, say, 2 quarters back? Because 2 quarters back, I think the peak of the new competition was impacting sector. Suppose that the new player is stagnating. In fact, they have called out that Q2 is lower than Q1. So if you could comment on that, and any thoughts on the CEO leaving the new paint company, because it's very early. So any thoughts you are picking up, or any thoughts you can share on this?
See, I wouldn't like to comment on happenings within a recent competitor and people leaving and joining and what they are doing. We have said consistently during the last 2 years that the entry of a large new player has not impacted us in any significant way. Maybe there are some other paint players who have been impacted a little more, but I don't think it has shaken up things very much. Now, this new incumbent, as you are all aware, has resorted right from its launch at unprecedented levels of trade discounts, etc. Thankfully, no one in the industry has chosen to follow that course, which is why everyone's EBITDA margins and profit margins have remained within the original band that they were, and people have not attempted to emulate these horrific levels of discount. The gross margin expansion that has happened for 2 or 3 reasons. One is that raw material prices have been softening slowly but steadily during the last 1 year. And this softening of raw material prices, which has not been accompanied by any price drop by the industry, has naturally led to a slightly higher trade discount by all players. Despite the slightly higher trade discount, which has been prompted more by a raw material price drop, the gross margins you would have expected to remain kind of stable for all players. For us, we have been focusing a lot on improving our premium end products, and that has borne fruit, and those are clearly visible in our value and volume growth numbers across categories. And when the premium end products grow more than the overall basket, naturally your gross margins go up because the premium products do carry a slightly higher profit margin than the economy range. So that is the main reason for the gross margin going up by 100 basis points compared to Q2 of last year.
Sure. My second question is on specific Bihar market. It's an important state for you. So currently we are seeing a very high election canvassing, which also picks up on the entire state GDP, given so much of travel, so much of consumption happens. Obviously, there is a 10,000 rupee freebie being given to almost every family woman. So from all this, do you expect Bihar to be a much faster growth than overall recovery, which you are anyway envisaging? Would you expect all this to really flow in Bihar in a more pronounced manner?
Not really. I mean, the good thing is that for the first time in the last 30, 40 years, Bihar elections are thankfully being conducted in only 2 phases. Now, in the past, elections in Bihar used to be in 5 or 6 phases, and that would stretch for typically more than a month. And that would spell disaster for the entire trade, because transportation and logistics in Bihar become very difficult in election time, unlike in the rest of the country. All vehicles, whether it is a 1-ton vehicle or a 10-ton vehicle, they get impounded by the election machinery for election duty, and there is no way in which you can ship goods. Now, half of Bihar has already gone to poll yesterday. So, including Patna, where our main depot is located, so all those vehicles will now get released from today and will be back in service. As far as the freebies given out by the government is concerned, I believe that they are more to the women community to encourage self-employment and business generation rather than any handout which goes for discretionary spends. So I'm not expecting anything as a result of election, either positive or negative as far as Bihar is concerned. Having said that, during the last 7-8 months, Bihar has been one of our strongest performing states in the country, where the growth has been definitely in high double digits. So Bihar has been one of the standout states for us in India amidst a relatively weak demand scenario during the last 6 quarters, and I think we expect that to continue going forward and further strengthen.
Sure. Sir, one quick follow-up on the competition from the new player. In terms of the 10% extra grammage, anything which is changing on ground versus say 2 quarters back and now?
I don't follow them very much because, as I said, they don't impact us very much, so we don't follow them very closely. What I've heard is that for most products, this extra grammage that they were giving, originally in 4-liter, 10-liter and 20-liter cans, I believe that they have discontinued it in the 4-liter and 10-liter cans. And there are rumors in the trade that this extra grammage, even in the 20-liter cans, may get discontinued before the end of the fiscal, but please don't quote me as an authoritative source on it. I think the management of that company would be best positioned to answer this question. As I said, we have not been very materially affected by them, so minor changes in policy by that company are really not tracked at a microscopic level by us.
Sure. Last quick question on demand side. In terms of commentary, your commentary was quite positive this time, and even the number 2 player in terms of sales and volume, they have also said that in Q4 they expect a double-digit volume growth for sure, and possibly even double-digit sales growth, which I think you are also kind of saying similar in Q4. So my specific question here is, which is the more contributing factor? Strong weddings, I understand. Strong rains leads to a lot of water leakage, and definitely from a sentiment also it's a positive. And third is, of course, new player is now stagnating. They were taking away 5-6% market share in first year. Now they are more of a status quo. Which is a more important reason in terms of the recovery to double-digit volume growth or sales growth for you by Q4?
I think the main thing that determines this is consumer sentiment, which is something which is not quantifiable. Good monsoon means good crops, which means a lot more money flowing into the rural sector. Along with that, the government significantly reduced income tax in the budget announced in February, which put more money in the hands of the middle class. Then RBI followed it up with 3 successive rate cuts, totaling 100 basis points, which has reduced interest rates and therefore people's EMIs on whether it is housing loan or consumer durable loan or etc. And then this GST cut, although it has not directly impacted the paint sector, but GST cuts on a whole host of household items puts more money into the pocket of the housewife. And when a person has a little more discretionary money available as a consequence of all of these things, the sentiment changes. Now, you can see that pre-Diwali, which is a time when people buy a lot of automobiles as is considered auspicious, or iPhones, etc., from what I read in the press, there has been bumper sales of these products despite a very short Diwali period. And splurge on credit cards and consumer spends on white goods, etc., have been at an all-time high. Now, this was missing for the last 1.5 years. So that is a clear signal that consumer sentiment has changed. That, along with the other very clear indicators that we gave you that we see as paint companies on the ground, show that that is going to translate into paint consumption very soon. Hopefully, and I cannot say that for sure, but hopefully there is a lot of pent-up demand that has built up with lesser painting during the last 18 months. And we hope that that pent-up demand will come back, and therefore the demand recovery, whether it happens in 1 month or whether it happens over the next quarter, that I cannot predict. But when it comes, it will probably come back with a bang. And we may see very, very high growth in the coming quarters as far as the industry is concerned. And you were talking about the narrative of another large player who had declared the results a few days ago. Yes, they're talking about double-digit volume growth coming in, but they also have said in their narrative that they expect the value growth to lag behind the volume growth. Now, in our case, you see that that is not true. In fact, it is quite the reverse. The value growth is higher than the volume growth by a few percentage points. So we are very optimistic of good results, good results not just in the top line, but also accompanied by strong performance on the bottom line, which as a company we have been very mindful of, and our results bear them out.
So thanks, that's all from my side. Thank you.
Thanks.
Thank you. The next question is from the line of Sonal Minhas from Prescient Cap Investment Advisors LLP. Please go ahead.
Hi sir, Sonal Minhas this side. I hope I'm audible. I have 3 questions. Sir, wanted to understand some bit of subjective logic behind putty and cement degrowing both in volume and value terms. Is this largely because these are outdoor paints and there was a heavy rain, and over the course of next 5-6 months, this is expected to settle back.
Let's take the question one by one. If you ask all three questions together, I'll forget the first one.
This is the first one only. This is the first one.
Yeah, I know. Cement paint is a small component of that category. The major contributor in that category by far is putty. We club them together because these are both powder paints and have some similarity in raw material and method of manufacture. So as far as putty is concerned, putty is a commodity. Now, putty sale is a matter of choice. It contributes very little to bottom line. But it is essential to make putty because it helps sell the other products. Now, the contribution of putty in our sale is significantly, by a very wide margin as a percentage terms, much, much higher than the putty contribution to sales in other people's sales, for example. Now, other people, it may be in low to at most mid-single digit. For us, putty contributes to definitely in the teens as far as value contribution is concerned. So it's a high contributor. We moderate sales of putty depending upon pricing, etc. If you find that there is too much of competitive intensity and the prices are dropping to unreasonable levels, we pull it back consciously because it doesn't make sense to sell products at a loss. So these minor variations that happen in putty, in some quarter you'll find it jumping up and some quarter you'll find it coming down. I'm sure you'll find a good growth coming in the quarters ahead, because we have managed to tackle this pricing issue by locating some toll manufacturers in different parts of India which are strategically located, which will be able to cater to the demand of those regions in a slightly more economical manner. So that is all that I would say about putty. I would not read too much into it because it's a very, very minor contributor as far as the bottom line is concerned.
Got it, sir. So I'll go to the second question, which is more with regard to states where your market share is growing and your starting position is that your market share is low, basically. So do we expect with the new capacity, maybe with the more headcount, more sales depth in these states, a focused, targeted growth over the course of next 1 or 2 years? And what are we doing in these states which is different from, let's say, the southern states where we are dominant, we have higher market share? Just wanted to understand a little bit on subjective insights that you can give on sales channel. What are we doing different in those states? Like you mentioned just a while back.
So in southern states, Sonal, the only state where we have a significantly higher market share than many of the other large players is Kerala.
Yes.
But it is not true that we have a very dominant market share in either Karnataka or Tamil Nadu or Telangana or Andhra Pradesh. So those are all states where we have a lot of catching up to do, including various northern region states where we had entered late and therefore we are still, shall I say, in the startup mode when it comes to Jammu and Kashmir or Punjab, Haryana, Himachal, Delhi, etc. So I think the playbook everywhere is the same. There is no separate strategy for states where we have a slightly bigger sale compared to states where we have a lower sales. Because even in states where we have a sizable sale, like Kerala or like UP or Bihar or now even Bengal or MP or Maharashtra or Chhattisgarh, the scope to grow is huge. I mean, we are nowhere near saturation. In most places, we are still number 4 player. And therefore, I mean, in Kerala, we may be number 3, maybe in Chhattisgarh, we may be number 2, but in most other states, we are either 3 or generally in most states, we are number 4 player. And therefore, the headroom to grow is huge. And therefore, our playbook now is more effective schemes for the dealer, which does not necessarily mean higher discounts. It means tailoring the schemes to what the dealer wants. Secondly, much more gratification and connection with the influencer community, which is the painter and the painting contractor. Again, better connect and better gratification does not necessarily mean more payout in money. Sometimes with the same payout, you have to deliver what the influencer is looking for, which may not be extra cash. It may be something in kind. It could be something else. And you have to connect with them on those fronts. I don't think our increased capacity is going to have any role in driving the sales out there. I keep saying that capacity is relatively irrelevant in this industry, so long as you have enough capacity to meet the demand, which all players do. So adding up more capex or more plants does not in the short term lead to higher sales. There is no planned major increase in headcount anywhere. I think our headcount is reasonably sufficient in almost all the states. We just have to execute better and tailor our offerings to what either the dealer or the influencer wants. Maintain our advertising, which we have been doing, so that we are there in the minds of the consumer. Maintain our product quality and our financial discipline, and be more consistent, and the results in the past have always followed. We have typically always outperformed the industry, except during the times when the industry goes in negative territory and the gap between us and the industry becomes very marginal.
No, understand that, sir, and thanks for the detailed explanation. But just to put a number on this to understand more as a analyst or as somebody who's researching, is breaking into a state and saying now we are more meaningful than what we were to begin with. Is that like a 3-year journey? Is that like a 4-year journey? Like just trying to figure it out.
I'd probably say it's a little longer than that. Okay. I would typically say that when you enter in new states, it takes 5-6 years to set up a wide and deep distribution network and to get your brand presence felt on the ground. So it does take quite a bit of time. It's not simply opening counters and dumping material out there. That's the easy part of it and not the right way to do it. Ultimately, you have to engage with the influencers in that part of the country who may not be familiar with your product. They may have heard of your product by advertisements, but they have to experience your product. They have to experience your service and delivery and get confidence in your product before all these start resulting in high volume of sales and throughput at the dealer counters. And I think a certain amount of patience is required to achieve that.
And if I may add to that, what happens is that you should be mindful about the margins your dealers or trade partners are maintaining. If being a new entrant in a new state, if you start expanding mindlessly, what happens is that they are not able to retain their margins. Ultimately, they are the people who are investing in building the market in terms of holding inventory and credit. So you should be very, very careful about that. You can't overdo it. If you try to do it in a shorter span of time, then effectively it will come back as a boomerang.
And is these margins tracked systematically by companies like yourself or Asian? I'm assuming so. But are there software tools to understand this more on a regular basis, just to kind of guess how does this data?
Sonal, it's very simple. Without having a strong brand pull that is created on the ground, if you mindlessly expand the number of dealers, which is easy to do, you will create competition amongst the dealers, which will drive down the retail selling price of your product and therefore drive down the margin that the dealer retains, and then the dealer loses interest in your product. Good. Now, if somebody tries to do this very fast, And there have been companies, I will not name them, who have attempted to do this, of expanding the dealer network a bit too fast. You get some short-term results, but that boomerangs on you very quickly because the dealer loses interest in you as fast as they have gained interest, and then they start dumping you, and then it's very difficult to come back from that position.
You've gone for long, sir, after that, basically. I agree. Yeah. Thank you, sir. Thanks for your explanation. Thank you.
Thanks.
Thank you. The next question is from the line of Yash Goenka from Avriga Capital Advisors LLP. Please go ahead.
Hi, sir. Am I audible?
Yes, you are, Yashi.
Okay. Thank you for taking my question. So you indicated unprecedented levels of scanning and collection growth. So can you quantify, is it the range you would like to go 20% or even higher?
Lot of disturbance in your line, Yashi. Can you repeat your question?
So my question was on scanning and collection. You indicated unprecedented growth in collection and scanning. So can you quantify what the growth has been? Is it 15 to 20% or even higher than that?
There was some growth in September. In October, I think the growth in scanning has been upwards of 30-40%. And the number of distinct people who have scanned has also seen a big jump, almost 18% in the month of October. So this level of scanning of tokens, we have not seen in a very, very long time, or perhaps the highest in our history. Now this means that the secondary sale in October has been excellent, is the only conclusion we can draw. And we look forward to this translating into great primary sales at our end in the months of November and December. That's all I can say.
Okay. And so the inventory level at dealerships would be lower than average?
It would be at this time. It typically does go down during Diwali. So typically what happens that before the festive season, July, August and September are the periods when dealers stock material in anticipation of Diwali. And 3 or 4 weeks before Diwali, the stocking exercise completely stops. At that time, the dealer goes into a liquidation mode and he buys only whatever is running out of stock, that much and no more. After Diwali is when dealers take stock of how much unsold inventory they have, and then the restocking exercise starts typically 8-10 days after Diwali, after all these festivities are over. So that is the phase that we are in now. So if the money inflow is good, it means their stocks are getting liquidated. They are not likely to purchase to replenish that huge amount of stocking at that time. They'll wait till the Diwali is over. And now is when the restocking of their inventories would happen. So I'm fairly sure with the fund inflow and the scanning that has happened that, the dealer inventory of our products should be at a fairly low level now across the country.
Okay, thank you, sir.
Thank you. The next question is from the line of Anirudh Joshi from ICICI Securities Limited. Please go ahead.
Yes, sir. So first question on Apple Chemie. Post-acquisition, it has done superbly well. So if you can share more details in terms of next 3-year vision or 5-year vision of Apple Chemie. Right now, the current total distribution network, current regions it operates in, and you have any market share target, reaching up to X% of market share of waterproofing and construction chemicals market, etc. So if you can elaborate a bit more on Apple Chemie.
So measuring market share in the segments that Apple Chemie operates is very difficult because it's a very fragmented market. You don't have too many listed players in India that give granular information for you to be able to measure those things. network concept does not exist because this is all B2B selling, and it is mainly construction chemicals, much less in waterproofing. So these are supplied to large infra builders of the country, people like L&T and Shapurji Palunji and Afcons and, various people who get contracts from the government for building large expressways, ring roads, bridges, dams, metro projects, etc. Now, previously, when we acquired this company 2.5 years ago, their play region was mainly Maharashtra. Now, encouraged and prodded by us, they have attempted to expand into different parts of India because generally it is the same infrastructure providers who operate in all parts of India. So now, in addition to Maharashtra, they get a huge amount of their sales from the neighboring state of Madhya Pradesh, and they have attempted to go into different corners of India. They have got empaneled in various impressive infra projects in southern India, in Tamil Nadu, and recently they have received a lot of empanelment in large infra projects in Assam and Bihar. So those supplies have started and they're expected to accelerate. The major competition from them comes from, at least for the high value products, from multinationals like Fosroc and Sika. For the lower value products like admixtures, etc., there are hundreds of manufacturers at a local level across India which offer competition. And they are progressively entering into more value-added newer products like sealants, etc., crystalline durability compounds. They have started hitting the export market a little bit now, which we hope will intensify in the days to come. So the idea, I don't have a specific number guidance that I can give you as to where Apple Chemie will reach in 2 or 3 years' time. But in 3 years, if this company is somewhere in the range of 200 to 300 crores, we would be very happy, so long as this growth comes in a profitable manner. And that is what we are trying to ensure, and the management at Apple Chemie is also very clued in on that. And aside from their business of B2B supply, you will note that it is after that acquisition that we inherited all the know-how to make high-quality waterproofing and construction chemicals under the Indigo brand name at our own factories, which are sold at the retail counters through the same paint dealers. And that has shown phenomenal growth in the last 2.5 years and is beginning to account for high single-digit contribution to our top line as of now, and the highest growth rate still comes from that segment. So I won't be surprised if next year the contribution from that segment to our top line is in double digits.
Okay, sure, sir. This is very, very helpful. Any thoughts on raising the stake to almost 100% at Apple Chemie, and any timelines for that?
Well, we do have call options to do that starting from April of 26.
Correct.
I don't think there is any intent to raise the stake to 100% because it's a company that is extremely well run by the current promoters, and we would like them to have skin in the game so that they are infused and motivated to continue to grow the company well. So I don't think we intend to get involved too much in the day-to-day functioning of that company. I think it is being run extremely well. We provide outside support wherever required. We are trying to help them out in developing a bigger export market because we realize now that there is a lot of export potential for these products. And that's the extent. Whether we will up our stake from 51% to a slightly higher number is a call that we will take by the end of this fiscal.
Okay, sure, sir. This is very helpful. Many thanks.
Thank you. The next question is from the line of Shashank Jha, an individual investor. Please go ahead.
Hello.
Yes, Mr. Shashank.
Yes, sir. I just wanted to know, like, about the ad I was doing. Your Vidna offer ad and also the TV. It just, मतलब, voting अलग हो जाता. Yes, sir.
I'm sorry, your line is not at all clear. I can't hear what you're asking.
So what I am saying is that because Vidna offer का ad आता है TV पे, तो mood अलग ही हो जाता है. तो ad quality.
Sorry to interrupt, Shashank.
लेकिन जो अपना
I cannot understand anything of the question. The line is too unclear.
Sir, can you understand me now?
No, I don't think the line is at all clear, Shashank ji. Are you using a handset? Yeah, try again, please. Yes, please, try again.
सर मैं एक ही बोल रहा था ना, वो एड को लेके बोल रहा था इंडिगो पेंट्स का. जैसे बिरला ऑफर का एड आता है तो बहुत ही अच्छा एड लगता है, तो हम भी ऐसा कुछ एड क्यों नहीं करते. मैं एज ए जस्ट यूजर पॉइंट ऑफ व्यू से बोल रहा हूँ. जैसे इंडिगो पेंट्स का एड थोड़ा सा वो लगता है, बहुत कॉमन सा लगता है, पता भी नहीं चलता, एड आके चला जाता है. तो कुछ एड पे थोड़ा सा अच्छा इनोवेशन होगा तो बहुत अच्छा रहता.
चलिए, ये मैसेज हम आपको अपने मार्केटिंग डिपार्टमेंट
मैं
को.
तो सर टीवी मैच देखता रहता हूँ ना, तो मैंने एक कॉमन चीज रियलाइज कर लिया कि लाइक मैं आपका शेयर लगभग 2 साल से होल्ड कर रहा हूँ, तो मुझे एक कॉमन सा चीज लगा, तो मैंने सोचा आपके ऊपर बता दूं.
धन्यवाद आपके फीडबैक के लिए. हम इसको अपने क्रिएटिव एजेंसी और मार्केटिंग डिपार्टमेंट को रिले करेंगे. हम लोग तो हर साल 2-3 नया ऐड निकालते रहते हैं. अभी पिछले महीने ही कोई नए ऐड की शूटिंग हुई है. अभी जो ऐड चल रहे हैं with Dhoni and some aliens, I thought that it was quite different from anything that we have done in the past. But still, if you are finding that it is not very differentiated, we will try and pass on these messages to our creative agency and sort of see what better we can do.
तो जैसे वर्ल्ड कप 2023 में ना बिरला ऑफर का ऐड आता, तो वो ऐड बहुत अलग लगता था बाकी सब ऐड से, तो उसका भी काफी इम्पैक्ट उनको हुआ होगा. तो जिस टाइम में एज ए चिल्ड्रन आई एम रिक्वेस्टिंग कि आप थोड़ा सा मतलब म्यूजिक भी काफी मैटर करता है ऐप में, तो इट कैन बेनिफिट अस. जस्ट माय पॉइंट ऑफ व्यू सर.
सुझाव है ये हम अपने क्रिएटिव एजेंसी को देते हैं.
श्योर सर. दैट्स ऑल सर. थैंक यू सर.
Thank you. The next question is from the line of Manish, an individual investor. Please go ahead.
Hello, am I audible?
Yes, Manish.
Hello. Good morning, Hemant sir. Congrats on the good set of numbers. Sir, my question is related to the retail consumers' behavior. Sir, do you think now the world has changed? Now, even for buying our daily groceries, we are dependent on quick commerce companies. Like the people have no time. Like they are ordering everything online, and they are too much dependent on quick commerce. So it's like the couples are working. So it's like, do you think now the people don't have that much time to spend for painting their house? Because it's like a lot of time-consuming, effort-taking activities. So do you think like there is something which can be done as an innovation to make this process very fast? Because if you see, I'm calling from Kerala, Trivandrum. So if you see there, there are frequent rains. So people have not that much interest to keep your luggage and stuff outside the house. And so it's because very time taking. So it's like you have, because they are keeping it as a last option. So do you think that behavior has changed? And if it is, like, do you have any plans to address that by some innovation to make it a fast process? That is my question.
Well, this is a question that everybody in the paint industry has grappled with, and people have tried to move to online sales. The difficulty about doing that in paints, items are very, very bulky and relatively low cost per weight, as compared to iPhones or even vegetables or other things. So to transport paints through quick commerce or e-commerce is very difficult. Secondly, when you are buying vegetables online, I think your wife knows exactly how much of potatoes and onions and brinjals to buy. But when you do repainting of a house, paints are not the only thing you need to buy. Along with paints, you need primers, you need putty, you need some brushes, you need rollers, you need masking tape and a whole lot of other paraphernalia. And typically consumers are not very knowledgeable as to what the relative quantities of all these things should be. And therefore, for all these reasons, they still prefer to go to a nearby store accompanied by an influencer or with a prescription written by the influencer as to what to buy out of a list of 10-12 items to do the painting. And attempts to sell paint online have been largely very, very unsuccessful across the world, not just in India. And I think that is where it is going to stay. So,
sir, just one thing. Sorry, sir. I think my question is not related to sales of the paint. That is fine because it's the people are ready to spend time on buying the paint. That is not a concern. My concern is the shifting of their luggage and waiting for 5, 6, 7, 8 days for the whole house to be painted. That painting activity. Do you think that because in this world, I'm relating it with
that
people
is already
are not
happening, Manish. I mean, many implements and tools have come up, and the market is flooded with them, and most painting contractors have access to them. For grinding the surface, there are tools available. For painting, there are now many people are using sprays instead of using a brush, which works much faster. This business about professionalizing and shifting your furniture and shifting it back after the painting is done is also something that is slowly being acquired by the better painting contractors. And it's a habit that will slowly come. The penetration of all these tools is much better. But most of these tools are relevant more for interior. For exterior painting, as you were saying, dislocation of furniture is not really involved. And generally, spray painting is not used as much for exterior as it is used for interior. And people are using brush and rollers for exterior. And the habits of the painters vary a lot from one corner of India to another. But when you say that you're from Trivandrum, I mean, Kerala is a slightly more sophisticated and advanced market compared to the rest of India. So most contractors that we have seen in Kerala have been the early adopters of all these modern tools which are available, which do shorten the painting cycle a little bit.
Okay, sir. Okay, good to know, sir. Okay. Thank you so much. All the best for the next one.
Thanks.
Thank you. Ladies and gentlemen, this was the last question for today. I now hand the conference over to the management for closing comments.
Well, thank you for hosting this call, and thank you all for patiently listening in. As I said, the gloomy days of the last 6 quarters seem to be coming to an end. We seem to be on the cusp of a demand revival. We are very hopeful that we'll come back to you at the end of the present quarter with significantly better numbers, and hopefully the industry as a whole will also be back on track with good growth numbers in the days to come. Thank you all.
Thank you very much, sir. On behalf of ICICI Securities Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.